I'll have to be honest with you. First thing I'm going to mention right up front is it's free. I like the service when it's free because, you know, you can tie up a lot of money in different services, and from experience I found out that sometimes you can pay a lot of money and you may not be getting that much out of it.
Get up to about that $5 level, but we're unable to hold it during the session. Like I said, closing up at $4.89. Soybeans for May trading up 19 3/4 cents at $14.57 3/4. Wheat in Chicago up 8 cents, and Kansas City wheat trading up 8 cents as well. Now, obviously, we have expectations going into this report on Monday. Brock, can you break them down for us?
Yeah, let's take a look at what the average of the analyst guests are for Monday's report. If you take a look at this table here, this is the average of the analyst guests polled by Reuters earlier in the week. The right-hand column is what the average guess is. The middle column is what we saw from the USDA in February's report. As you can see here, corn, we're looking for a little bit of a bump up in the ending stocks by just about 7 million bushels. Soybeans looking for a little bit of a reduction there by about 9 million bushels. And wheat, we're looking for a bump up of about 12 million bushels. So not big changes anticipated here, but some areas that we are going to have to watch are the export sales and how the USDA is going to revise those anticipated sales paces. We know for corn and soybeans we have been running well ahead of pace. Wheat, we have started to back off on the pace that we saw earlier in the year, so I think we could see some revisions, in particular to corn and to soybeans in their export sales, maybe a bump up there. Wheat, we could see a slight revision lower. That would also add to the ending stocks here. Another area we're going to have to watch on Monday is going to be the soybean production out of South America. We know that this, over the last month or so, has really been an area that the traders have been watching and really has put a little bit of a bid under the market here over the last month or so. If you take a look at the right-hand column, this is the average of the analyst guess for soybean production. You can see in the middle column the USDA was projecting about 90 million metric tons. We're looking for about a 2 million metric ton reduction out of Brazil on their soybean production. Argentina, a smaller reduction, only by about 500,000 metric tons. So these are a couple of areas we're going to have to watch: the export sales here domestically, and then what the production is out of South America for this coming year.
You know, Brock, one thing when you're looking at this is you are looking at that South American production. One of the reasons why we have been rallying so sharply, but this rally in the corn, soybeans, and wheat, is this affecting basis? Let's take a look right now. When you look at the average U.S. basis for corn and for soybeans, we ended up moving down about 2 1/4 cents this week. We did have some strength at the river, up about 1 1/4 cents, but on average, soy plants were unchanged. Now, when you take a look at corn, it was slightly different. We were actually down 4 3/4 cents on the week. The biggest area of weakness was ethanol plants, down 7 cents, but the river was able to hang in there with some sort of strength, up 3 3/4. Now, I think that's very interesting when you look at ethanol, which is trading down. That's kind of a show of domestic demand. And when you look at the river market, which is really foreign demand and exports, you're seeing a little bit of strength here. I think part of that strength along the river has really come from the fact that our exports, the amount of grain that's actually left the country as a percentage of the amount that we have booked, is running a little behind the pace that we normally see. I think that's one of the reasons why we are seeing some strength here in the river markets.
You know, Cody, it does seem like we're having a little bit of a diversion between the cash market and what the futures market have been doing here recently. We've seen a rally in the futures market. We've seen the cash market back off a little bit. Do you think there's any implications for the futures market moving forward and into Monday's report from what we're seeing in the cash market here today?
Well, really, I think that the decreases in basis in the cash market is a result of farmers and producers selling into this rally. If you'll take a look at this chart here, what we're seeing is the U.S. average corn basis calculated off of the May contract. So you know that last week we were using the March contract. Now we rolled into May. So just to avoid the roll, I just calculated all new bases off of the May contract. And what you're seeing here is in red, you're seeing the futures price. So this is what the futures price has done. In the green line here, this is the cash basis, the U.S. average cash corn basis. And you're really seeing that as that trend, as that rally picks up, you're seeing a little bit of a tapering and almost weakness here for the cash basis. You're seeing that producers are taking advantage of this and selling into it. And on average across the U.S., we're backing out basis because the demand for it really there seems to be plenty of producers that are willing to price grain at these levels.
You know, if you're looking to make a last-minute sale before those USDA reports, maybe take a look at your river terminals. They could hold some basis opportunities that are a little bit better than what we're seeing in the countryside right now. If you have any questions about what we talked about, give us a call here at the office, 877-472-4607. Follow us on Twitter. We'll be tweeting the USDA numbers once they come across the newswires. Or as always, visit our website, grainedge.com.